Hello again, everyone. It's Vince Fuller from TradeWinds.com, and this is our update for March 15th, 2017. Let's take a quick look at today's markets. Well, we saw a fairly quiet morning, but then after 2 p.m. Eastern, after the Fed came out and announced, as expected, a rate hike of a quarter point, and didn't say a whole lot else, which is what I think the market really did like. No other surprises. The Dow finished up sharply by 112 points, and you can see it bouncing nicely off this upsloping 20-period moving average. Looks like it is about to make another run here, as is the S&P 500. It was up 20 points, while the Nasdaq was up 43, and even the Russell today up sharply, up 20 points. Just about everything else was up as well. Bonds moving up sharply by a point and a half. Gold managed a gain of about 16 points at the close, continuing to go higher here on the futures market. And crude was up 2.4% as well today. The only thing that didn't do well was the dollar. And if we look at the dollar index chart here, down sharply. This really, again, based on the Fed, I think what the street was worried about was the Fed coming out and announcing a much more aggressive rate hike schedule, which they did not do. And that's, again, what I think the market really liked. And that's why the dollar stepped back here. But many breakouts to the upside after that announcement. And Apple was one of them here, putting in a fresh new high here intraday. And if you look at this closely, we not only traded, but we closed above these previous highs here. So any trade above today's high and that breakout is confirmed, obviously we have no resistance up ahead. It is at these highs. So that looks good for another, excuse me, move higher here in the near term as well. So that's what we can expect in the near term. And again, as long as there's follow through tomorrow, but don't see why there wouldn't be. We should be headed back to these highs for the equity indices here, and many stocks like Apple making another run higher. That's about it for now. Enjoy the rest of your day, and we will see you on our next update.